Hello and welcome to this special series, Invest Right to Future Bright. Joining me today is well-known financial planner, Surya Bhatia. Thanks very much, Surya, for joining us. We've seen enormous volatility, perhaps something that happens once in a decade.
Maybe more than that.
Maybe more than that.
Yeah.
And, the big question in people's mind is, of course, fear. And, what we saw playing out in the beginning of March, especially, and right from the time we hit peaks in January, sharp fall and lots of volatility. 1,000 points means nothing anymore. Movement.
That's true.
So, in such a time, how do you explain to people how to handle volatility? What is the right way to handle volatility when you see so much of red on your screens?
I think you have to firstly understand that if you do an asset class which is inherent nature is bound to be volatile. And here we talk about equity. And I cannot say that debt also has not gone through the volatility phase, but that's a little unprecedented. But typically when you look at equity as an asset class and then you come and believe that this will not be volatile, I think then there is something wrong somewhere. That's the inherent nature of that asset class. And that's why it's not a linear curve as far as the returns are concerned. Yes, this kind of volatility is not seen many of the times. I think as you rightly said, I think this number of the VIX index as it is called as, has jumped up by 34-35% in only one single day, which is just too much for anyone to handle. But yes, you have to be prepared for these kind of eventuality. And you should need to look at volatility as an opportunity for yourself. It is easier said than done. Sounding is very easy, even look at around you. It's a carnage in the markets. Markets have been bleeding and everyone is losing money. No one has made money. No one can say that I have made money in these markets. So it's a bloodbath. So you have to find the opportunities from here. How do you really ensure that when the improvement happens from here, how will you stand to gain the maximum, or you will gain from here onwards? So you have to find opportunity and see, look at your portfolios. If you're already 50% debt, 50% equity, see, can I look at some increased allocation to equity from here? Can my 50% go to 55% or 60%? And by the way, that 50% also would have been down to 40, let's say 40% or even lower right now. So can I do that rebalancing over here? Can I increase my equity exposure? Subject to my needs for sure. So that's one way to look at it and to counter that volatility. And if you cannot do all of these things, and how do you ensure that within the portfolio you have, what improvement you can do to the portfolio or changes you can bring in the current context, that how can I change one scheme or one stock, depending on what quality of the portfolio you're holding, to ensure that when the market starts turning around, when you have a V-shaped recovery or a U-shaped recovery, how do you see which stock, which fund will perform better from here onwards to give me that extra impetus that the portfolio starts showing the results when the market starts improving. So you have to use this to your advantage.
So, SIP has been a buzzword, and, one of the things that planners like you have always said is that SIP helps curb volatility. And yet when you see such sharp falls, the immediate tendency is to stop. Because you fear that, markets are going to fall even further. So, continuing with your SIP is a good way to beat the volatility according to you, even when you see such sharp volatility?
Surely. I think you need, and the numbers are also saying the same. If you look at the numbers, which is the data which has been released for the last month, the numbers actually have been going up, which is very encouraging. But the numbers itself, while they are good numbers, are small in the overall context. So you need to see that these numbers are maintained and grown. And from an investor, yes, you need to continue your SIPs. And you can even think of adding more to it in these markets. You don't need to miss the SIP opportunities, and as soon as when you have the surplus with you, to add on to the same kitty if you can, if your cash flow permits you.